Do you know which ETFs pay the highest dividends? 5, 6, and even 7%. Watch the video to the end and you'll find out what it's like to get high dividend payouts. And don't forget to like it. Thanks. There were only 276 ETFs in 2003. In less than 20 years, the total amount would grow by more than 3,000% and reach 8,552 by 2021. You've got a lot of options and won't be able to invest in all of them. Here are the best 3 that you should look into first. Third place, eShares International Development Property ETF WPS. The WPS is like a REIT real estate investment trust, which includes a wide variety of public property investment firms located outside the U.S. These international real estate investments and trusts are an easy way for investors to diversify their portfolios at a low cost. WPS doesn't stick to any particular real estate sector and is involved with industrial, retail, and residential firms. The majority of assets are located in Japan, 26%, with Australia 13% and Hong Kong 9.5%, rounding out the top 3. The annual dividend yield for WPS is 5%, one of the highest on the list. The reason that it's not higher is that the expense ratio is the highest. At 0.48%, you'll be paying a hefty price for your dividends. Profitable to buy these and other assets can be on my recommendation in the description of the video. This is a quality broker used by millions of investors. Second place, Vanguard High Dividend Yield ETF VYM. The VYM includes an incredibly diverse group of 446 large-cap U.S. stocks screened based on dividend payouts. VYM is dividend investing through a dividend exchange-traded fund, dividing the annual dividend per share by the latest share price and only going after those with the highest yields. With a high market cap and low volatility, the ETF has top holdings across the financial, healthcare, and consumer-based sectors and includes stakes in J. Morgan, Johnson & Johnson, and Procter & Gamble. The annual dividend yield for VYM is only 2.80%, but the expense ratio is a ridiculous 0.06%. In other words, a $100,000 investment will only cost you $60 in annual fees. You might not see a sizable total return as other ETFs, but you definitely won't see one that costs less. Before we get to the first place, don't forget to subscribe to the channel. Thanks. First place is JP Morgan Diversified Return International Equity ETF JPIN. You can argue that the JPIN isn't sold as a dividend ETF. However, it comes with a very high yield to expense ratio, which puts it number 1 on this list. The JPIN features a diverse collection of companies from around the world. 30% of the portfolio are companies based in Japan, with another 20% coming from the UK. The rest are companies from Australia, South Korea, Hong Kong, France, Sweden, Germany, and many others. The annual dividend yield for JPIN is 6.53% and comes with an expense ratio of only 0.37%. You aren't going to find a much more profitable ratio on this list or anywhere else, for that matter. You should consider this ETF your priority and look into it first. Do you know which stocks pay a dividend of 17% annually? Subscribe to the channel so you don't miss these videos. Thank you.